Okay, everybody, let's log into my Wells Fargo so that you can see what my FICO score is, right? So, once again, ain't no surprises here. 850. I have been maintaining that 850 for quite a long time. Like, if you look through the records, for quite a long time, I've been maintaining this 850. And the thing about it is, as you've just seen, Federal Reserve has raised interest rates, which we're going to talk about. But see, I'm not worried about it because wherein people who have, how should I say, less than perfect credit or average credit or below average credit have to worry about those increases in rate. For the most part, I ain't worried about it. Number one, because chances are I would probably pay cash for most things that I would buy, with the exception of if I bought another house or property. And other than that, the only thing, they changed. Oh, I see. My score actually has gone up, but there was nowhere for it to go. So I remember before, I think I was below average, and I think it was new credit applications because I think I had taken out a credit application. But nope, all them things say exceptional. So I have exceptional payment history, which means that I have not missed any payments in like the last decade. I haven't been late on anything. And that's one of the ways that you've got to make sure that you do it so that this way your credit stays spotless. On top of that, current debt, I have no debt. I have no debt. No debt. So, yeah, as you could see, Wells, it's exceptional. And this is, by the way, this is not just according to Wells Fargo. This is according to Experian. And Experian is one of the three credit rating agencies. Experian, TransUnion, Equifax. Now, Experian goes up to an 850. I believe it's TransUnion or Equifax. They only go up to an 830. That's their top score. So TransUnion, Equifax, and Experian will never all be 850. It's just that, as you can see, this is my Experian data. And the reason why I usually use Wells Fargo is because when I bought two houses, I bought both of them. The mortgages were both from Wells Fargo. So just to let you know, because you might be a new viewer here, and, I just want to, give you the heads up on how I roll. So as far as my credit history, as you can see, my credit history, well, you see it yourself. It says exceptional. New credit applications, exceptional. Types of credit, exceptional. So I have real estate credit. I have car credit. Usually at any given time, I have two different cars. Now, what I usually will do is I'll usually take out the loan, but then I'll pay it off as quickly as possible, and I usually pay it off like years before it's due. That's exactly how I treated my student loans. My student loans, I paid off 10 years early. Basically, what I did when I was paying student loans was I got a second job, and then I started writing reviews for ePinions.com, and then I started making YouTube videos and getting paid on YouTube, and I took all that extra money and I put that towards my student loans. After I finished paying off my student loans, I was taking the majority of that money and I was putting it towards my stock market accounts with E-Trade and like Scottrade. Now I just have, what is it called? TD Ameritrade and Charles Schwab. So basically that's who I do the bulk of my, trading with and everything. But this is what it is. See, the thing about it is, if you want to have exceptional credit, you can either choose to listen to me or you can choose not to listen to me. Either way, it doesn't affect me. But I believe in paying my bills every single night. I remember hearing a joke. I can't actually tell that joke because some people might find it offensive. And it was about a rich man who was go to sleep every night. Before he'd go to sleep, he'd count his shekels. And when I heard that, I was like, that's a great idea. So usually before I go to sleep, I usually check my bank accounts just to make sure the money's still there. And on top of that, if there's any debts that I owe, I pay them pretty much at night. And that's just my discipline. Now, there's been people arguing with me, and they're like, oh, you don't have to pay them off every night. But I believe paying them off every night makes the most sense because I have worked in real estate banking underwriting. And the simple fact is that if you run revolving balances from month to month and they see that you're holding on to debt, then the creditors take it as a signal that you are supplementing your income by using your credit cards. And that actually hurts your credit score. I'm going to make this as quick as possible. I'm not going to spend too much time talking about this story because it's basically, it's current news. Yahoo Finance, Jerome Powell. Federal Reserve raises interest rate by 0.50 percentage points to curb inflation, but sees steeper hikes ahead. So it says the Federal Reserve is going slower but aiming higher. The Fed raised its key short-term interest rate by 0.5 percentage point Wednesday, dialing back from recent outsized hikes as it draws up an endgame in its aggressive campaign to tame soaring inflation. This is not an endgame. You need to be raising rates a lot more, and I don't think you're going to do it as quickly as you need to, but I'll get to that later. But the central bank forecast another 0.75 point in rate increases next year, more than it previously estimated. Fed officials are thus signaling they believe inflation is still too high and aren't backing off their hard-nosed battle to subdue it despite growing recession risks. In a statement after a two-day meeting, the Fed reiterated that ongoing rate increases will be appropriate to bring down yearly inflation to the Fed's 2% goal. Some economists reckon the Fed instead would say additional increases would be needed, signaling the Fed is close to winding down the hiking cycle. At a news conference, Fed Chair Jerome Powell said recent reports showing inflation easing in November and October were welcome. The report is very much what we expected and hoped for, he said. But he added it will take substantially more evidence to provide confidence that inflation is on a sustained downward path. He said the Fed is looking for several such reports that reveal steadily easing price gains. How much did the Fed raise interest rates? It says the Fed's latest move follows 4 straight 0.75 point increases and takes the federal funds rate, which is what banks charge each other for overnight loans, to a range of 4.25% to 4.5%, a restrictive level intended to slow economic growth. The hike is expected to ripple through the economy, driving up rates for credit cards. Now, first of all, I'm going to stop right there. This is the reason why I pay my credit card bills every single night. I can't even tell you the last time I paid an interest charge on a credit card. I can't tell you the last time I paid a finance charge on a credit card. I can't tell you the last time I paid a late charge on a credit card because I pay off my credit cards every single night. So that goes for my Apple card. That goes for my Capital One Venture. That goes for my American Express Centurion Black card that I use for business purposes only. That goes for my American Express Blue card. And that also goes for my, what else do I have? Oh, yes, I have a MasterCard Gold, Platinum. I have a Gold and a Platinum from MCU. So the bottom line is, you pay them off every night. You ain't got to worry about none of this shit. It doesn't matter if the Fed raises these rates another 10%. It doesn't matter because you're not paying it. You know who's paying it? Pookie and Ray Ray are paying it. They're paying it. Bill and Pat and Tyler and Caitlin, who Caitlin decides, I'm making these names up. Caitlin decides, oh yeah, I'm going to go and I'm going to buy some Gucci bags and I'm going to have the freshest Gucci and I'm going to spend all of this on credit and I'll pay the bill back later on. Yeah, so Kate is subsidizing my trip to Maldives and my trip to Bora Bora. That's what Kate's doing. She's subsidizing me. That's how I get my points. I get my points off of people like Kate. I get my points off of people like Pookie and Ray Ray. Oh, yeah, yo, that's a hot gold chain. Yeah, I'm going to buy this big-ass gold chain. I'm not going to wear it out in the street because I might get my ass whipped, but I'm going to buy me a big-ass gold chain so I can impress the ladies. Yeah, I don't really have the cash, but I'm going to put it on my my Amex, my Visa card. I'm going to put it on my Visa card. Yeah, because the Visa's got the higher rate, so that must mean it's better. Yeah, Pookie and Ray Ray are financing me. That's right. They are subsidizing me. That's right. They are. Anybody who decides that they're going to go out and they're going to buy a car and they don't have a down payment, so they decide to put that on the credit card. Cadillac, I was talking to the finance manager because I went to check on my car to see when my car is coming. It appears that Cadillac is trying to hold off deliveries until the new year, so it looks like they're forcing us to wait until like January or February. The finance manager and I were talking, and he was talking about the fact that anybody who puts down deposits on a credit card, I think they're limited to like $2,500 because in the past, I think people put down like $5,000 and $7,000 on credit cards and defaulted. So some of you people are riding around with these huge credit card bills. Let me tell you something. If you are sitting around with a credit card bill that's over 4,000 or 5,000, I'll just round up. I'll say if you're sitting around with a credit card bill over $5,000, you're the person that this federal rate hike hurts a lot. If you're the type of person who's sitting around with high interest student loan debt that isn't subsidized by the federal government, you're the type of person that these federal rate hikes are hurting. If you're the type of person who goes into ShopRite or Stop and Shop or Key Food or Pathmark or whatever, and you're shopping on a credit card and you're thinking that, you'll pay it back at the end of the month as soon as you get paid from your job, you're the type of person that these rate hikes are hurting. If you're the type of person that is looking to buy a house and you see nothing but sticker shock, not only are these houses appreciated in value far beyond what they should be, they're actually inflated in value. But on top of that, if you tried to get a loan, you'd end up paying damn near 7% interest rate. You're the type of person that these federal results, these raises in their rate hikes, you're the type of person that it's going to hurt the most. And that's just a reality, guys. That's just a reality. It says, how high will the Fed interest rates go? That's the important thing. The Fed now expects the rate to end 2023 at a range of 5% to 5.25, higher than the 4.5 to 4.75 projected in September. According to policymakers' median forecast, it estimates it will cut the rate to 4.1% by the end of 2024 to support an economy it's likely to be weakened by the rate increases above the 3.9% it predicted in September. Let me explain something to you. First of all, it says the Fed now expects the rate to end 2023 at a range of 5%. Now, let me just say this. When I was a kid in the 1980s, my parents set up a bank account for me in order to put a savings plan together, right? It was Republic National Bank. I don't think they exist anymore. They had an interest rate back then, and I'll never forget this because when PlayStation 1 came out, that was like 1990 something. It was probably 1993 or 94. When PlayStation came out, they had an interest rate on my money of 10%. It was a 10% interest rate. Now, mind you, prior to, my childhood, we had Paul Volcker who raised interest rates significantly. And it did the job of stopping inflation. And that's why Paul Volcker is still remembered. The problem was a lot of people hated it because it killed off their ability to spend. Now, in this current society, we're dealing with people who are much, much, much worse and much, much less disciplined in their spending. They're not spending money they've earned. They're spending money on credit mostly. They're buying $1,000 cell phones on payment plans. Let me tell you something. You in no way should have a fucking financed cell phone. If you couldn't afford to pay Apple or Android, if you couldn't afford to hand them the money in cash, then you couldn't afford it. But you don't want to hear that. You just wanted it. And you went out and financed it. What did T-Mobile say? Oh, yes, sir. Well, if you get this phone right here. Because you know how Androids are such shitty phones that when they give you an Android, they give you like 3 for like 1. If you buy one phone, they give you like 3 free for your family. Apple don't do that shit. It's like if you buy something from Apple, you paying for it. Oh, yeah, no, sir. Listen, welcome to T-Mobile. You can get this Galaxy S22 right here, and there's a finance plan option for it. You don't even have to pay for the phone right now. The phone's about $1,000, but you don't have to pay for it right now. You can pay for it over the course of your phone bills. Oh, you have a daughter. Your daughter wants a phone too, so she could take pictures of herself and put them on OnlyFans? Oh, that's great. We could throw that in too. Oh, you have a wife. Oh, what's your wife's name? Ruth Madoff? Oh, great. We can throw her a phone in for her too. Oh, you've got a son? Oh, your son wants to have this so he can play video games while he's in class not paying attention to what's going on in school, so he wakes up one day and can't get a job? Great, we can throw that in too. So, sir, okay, let me ring up your bill. You've got 4 phones. Everybody's getting a phone. T-Mobile, one of the shittiest services that we've got in New York. You can't hear shit. When the person's talking on the other side, you can't even hear them. Okay, that will be, let's see, okay, tax is 8.275. Oh, okay, sir, well, right now, all you have to pay us is $3.99, and you can pay us the rest over the course of the phone bill. So here you are, you dumbass. You let your daughter and your kids your son sucker you into buying these $1,000 phones, and you're going to be in debt for like the next 2 or 3 years over $4,000 worth of cell phones. And that's not even counting the $300 a month that your cell phone bill is probably. You know, it's funny. Right now, I'm actually looking at a freeze frame of Bernie Madoff because I was watching The Wizard of Lies. It's one of my favorite movies because, you know, I like to know what Ponzi schemers look like Sam Bankman-Fried. And it's funny because not Bernie, but Robert De Niro is literally like staring at me right now. He's staring at the screen. In fact, I should let you see what I'm talking about. So yes, while I'm talking, I was watching, what's his name? Graham Stephan, for one. And then I'm, you know, watching right here. This is Robert De Niro because I was watching The Wizard of Lies on HBO. And he's literally like just staring at me with them eyes. And he's like, yeah, they caught me. And then I'm thinking of this piece of shit, Sam Bankman-Fried, right? Bankrupt fraud. And I'm thinking about the fact that, you know, the Democrats sure rushed to arrest this guy. Now, he could have testified, and had Sam Bankrupt-Fraud testified, he could have named all of his accomplices. He could have named all of the Democrats who he put money in their pocket. He could have named all of these people he was in bed with. But sure enough, right before he could possibly testify, Sam Bankrupt-Fraud got arrested, and they're going to put his ass right in a cell. He's going to be in the booty house, probably with, well, you know, you never know. They might get his girlfriend, his ugly-ass girlfriend who looks like Cutman from Mega Man. They might get her, too. And I'm looking at this Bernie picture of this guy. This is Robert De Niro playing Bernie Madoff in this movie. This is a great movie. I love this movie. And I'm thinking to myself, I'm like, you know what? They timed that shit real well, didn't they? All of these people need to go to jail. All of them. All of them. So here's my problem. I divert from the story way too much. You know, I rant, I rave, I divert. You know, I just do it. I can't help it. I love it. That's what YouTube is. It's just so much fun. It's like some people keep saying I should have a podcast. As far as I'm concerned, this is my podcast. But anyway, when I was a kid, the interest rates were 10%. In order for the Fed to truly fight inflation, they have to raise the interest rates above the inflation rate. Now, I looked up the current inflation rate recently, and they said that the inflation rate was like 8.5%, which I don't believe. I think it's higher than that. I don't believe it. It could be twice as much as that if you really look at all the goods and services that we're forced to purchase in order to basically stay alive. Like you talk about energy, you talk about food. The price of just about everything has skyrocketed. You know what's funny? This is how you know about the price of food. You can't look at processed food. If you look at processed food, one thing you're going to notice is processed food is the prices haven't gone up too much in processed food. And that's because with processed food, they can always substitute ingredients. When you're talking about chicken, raw chicken, when you're talking about raw chicken, raw beef, bacon, eggs, you talk about anything that's not processed, anything that's real, that like they just took the animal outside, beat the shit out of them, and then they cut slices off of them. That's real. That food can't be faked. It's not like that boneless chicken garbage where you got boneless chicken. You have no idea what's in that shit. However, when you get those chicken wings cost like $20 a bag now. And then they have that thing called shrinkflation, where what they do is they reduce the amount that you're actually getting in order to make you think that you're getting the same amount that you'd normally be getting when you pay the regular amount of money that you normally pay. Shrinkflation is big. Like I've noticed that I'm getting less toilet paper. I've noticed that if you buy a bag of chips, it's like $5, but you get less chips. I've noticed that, well, there was something else. Not soda, not milk, because those things are basically processed. There was something else I bought, and I know I got less of it than I normally would have gotten. But you get my point. That's the bottom line. If the Federal Reserve does not raise the interest rates above the price of inflation, then they aren't really serious about fighting inflation. And that's just a simple fact. That's a mathematical fact. The reason why they don't do that is because they don't have the political stomachs to do that. They're already having problems where, houses aren't selling the way they need to sell. Cars aren't selling the way they need to sell. You've got Carvana is basically bankrupt, and Carvana is going to have a fire sale. So if you're looking for a used car, you might be able to get it from Carvana, because these idiots were buying cars overpriced, worth more than they should have been. And they kept doing that, not showing a profit. And now they put themselves in a financial hole. No bailout. You're going under. That's it. So bottom line is this. There are certain sectors of the economy that are busted up, broke down, ain't going nowhere, not moving. Stagnant. Stagflation. That's where you are. Stagflation is a combination of recession, unemployment, underemployment. But the most important thing to remember, that stagflation happens because of poor government policies. Poor government policies meaning that they were printing welfare checks. They kept the interest rates way too low for too long. They inflated bubbles in the stock market. They inflated bubbles in the housing market. They inflated bubbles everywhere. They inflated bubbles in student loans. They inflated bubbles in car loans. They inflated bubbles, the crypto market. And now, because they had to raise these interest rates, they've popped all of those bubbles. So look at what student loans. Now, those Democrats, after they got their money from bankrupt fraud, after they got their money and they got into office, look what happened now. He's under arrest. And then they're telling you, oh, well, that whole thing we were talking about, student loan forgiveness, I don't think it's going to happen. Republicans in there in the House, they're still making fun of the red wave. But guess what? The Republicans in the House now. So you can't just do all that bullshit you were doing before. Not without somebody talking back. And now when they talk back, now you ain't got no choice but to listen because of the way this government is set up. Yeah, that's right. So y'all still making fun of that red wave? How about now? So guess what? Courts have said, yeah, well, this shit might be unconstitutional. So we're going to pause that through the summer. So meanwhile, the same people who had the same student loans, willy-nilly taking out money to get these bullshit degrees, these worthless fucking degrees, can't actually do the jobs, but getting worthless ass degrees, ending up deep in debt. And they praying to Joe Biden. They get on their hands and knees. They on their knees praying to Biden. And they don't seem to understand that it's not his choice. The Congress has the power of the purse. So what do? They just pause it. We'll keep it paused to the summer 23. 2023, we're going to have student loans paused till the summer until the court comes up with a ruling. Think about that. Knowing Biden, he'll try to keep this paused up until he's out of office, and then it'll just be the next guy's problem. And the next guy ain't got the control of it either because it comes down to the Congress no matter what. Do you see what we're doing right here? This is corrupt. This whole thing's corrupt. There's no, I wish I could be president, but I can't because you know what they'll do. They'll be on Fox News. They'll be on MSNBC, CNN. They'll all team up against me. They'll be playing back my YouTube videos. Yeah, this guy's crazy. Yeah, I already see it. I already know it's coming. I still got Bernie Madoff. He's staring at me right now. He's still looking right at me. And I already know how that one ends. But the bottom line is you need to fix your credit. You need to pay off your debt, and you need to keep your debt paid off. And that's the bottom line. Save your money. There ain't nothing you need to buy right now. I wish that you knew how to negotiate the way I do when it comes to buying a car, because I guarantee you, if you knew how to negotiate the way I do, not a damn one of them would be taking you over sticker. Not a damn one of them. Because if it was me, I'd go into this dealership, especially with my good credit, 850 score. I'd string them along. I'd let them think that, yeah, he's just going to sign. He's just going to sign. I'd wait right until I got to that finance manager. I'd be like, yeah, fuck this. I'm not paying it. And they'd be like, wait, no, but I thought you wanted this car. And I'd be like, yeah, I do want it. But you know what? I had time to think. And I say, I'm not paying you over sticker. I'm not paying you a motherfucking dime over sticker. So I'll tell you what, buddy. You take that bullshit overcharge, that sticker that you got right there that says market adjustment, take that shit the fuck off my car. And if you can't do that, I'm going to get up and walk out of here. See, I didn't make a video. I don't usually make videos. Like when I went to Mercedes and I was just looking at options instead of getting this Cadillac Lyriq, because I'm pretty much steady on getting the Cadillac Lyriq, right? I was looking at options. There were two options that I considered. One was the EQB, which is the smallest Mercedes like crossover, but it's electric. The other one was the EQS SUV. It's bigger than I need. It's got a third row. I don't need a third row. And then there was also the BMW iX. I like that i7, but I'm not paying them $150,000. Now the iX is less than $100,000, so that's a little bit more reasonable. It's like 99 or something like that. But you could probably get it discounted because it's been out for a little while. But the guy with the Mercedes, and I talked directly to the manager. So he was like, oh, yeah, well, we're selling these things $10,000 over sticker. I was like, yeah, that's cute, but I'm not paying it. And later on, when I had left, when I was getting ready to leave, the salesman runs, I swear to God, the salesman runs right out the front door. Now, I'm walking to my car. He runs out the front. He's like, you know what? Oh, yeah, no, do me a favor. Come back. And they take you right back in. You go right back to the manager. And, well, listen, if you would buy it today, I think I could take that market adjustment off. You goddamn fucking right you could take it off. What do you think this is? You think this is a game? You think I'm fucking playing? But y'all don't know. y'all aren't me. When I go into these dealerships, when I go into these home sales office, I'm a fucking predator. When I go up in there, I be laughing. I go up in there laughing at them. I'll be like, yeah, hey guys, yeah, I'm here to buy. What you got to sell? I'll tell you how much I'm paying for it. It's like, what do y'all think this is? This ain't no game. We got $850 up in here. If you see some people be like, oh, you just bragging. Listen, if you can't shout out your credit score, then you're not proud of it. I can shout that shit as loud. I'm in my house. Ain't nobody can tell me shit. I can shout as loud as I want. You know how some of y'all got these apartments and you live in your mama's basement and you live in daddy's attic? If you were shouting, they'd think there was something wrong with you. Not me. I'm in my house. I could scream at the windows. I could look at my ceiling fans and yell at it. I could be like to the television. I'd be like, hey, guess what, television? I got an 850. And yell at the television. Ain't nobody can say nothing. See, that's ownership. That's what America's all about. It's about ownership and independence and freedom. Either you got it or you don't. And let me tell you something. If you knee deep in debt, you ain't free. What did Joe Biden say? You ain't black? No. If you knee deep in debt, you ain't free. If you got student loans around your neck, you ain't free. If you renting from somebody, you ain't free. Because if you rented from somebody, you can't do shit in that place. If you see my carpet, I know you can't see it, but I'm just saying, you see my carpet? If I decide to right now, I could take a match, light it, and throw it on the carpet. There's nothing they could do about it. Not a goddamn thing they could do about it. Now, I can't let the whole place burn down because the fire department's going to come and they're going to be like, they might want to arrest me, call me an arsonist. Bottom line is I can do whatever I want because that's called freedom. If you don't have that, then you ain't free. It's just that simple. They want you to not be free. They want you dependent. They want you praying to Joe Biden for student loan forgiveness. They want you begging them for discounts on your car and your house and stuff like that. It's like I ain't playing those games with these people. I am not fucking playing with them. I'm not. So as far as these interest rates go, get yourself out of debt. If you don't, you will regret it. These rates going up means that you will visually see your monthly payments go up. And you'll notice it too. You'll notice those monthly payments go up. Your cars are fixed, so you won't see interest rates rise on your cars. Your home loans, for the most part, are fixed interest rate. There aren't really any more adjustable rate mortgages being sold for the most part. So you're not going to have too much of a problem with that. But for the most part, it's like, you better get yourselves out of debt. And that's the bottom line. That is the bottom line. I ain't worried about Jerome Powell. I'm not worried about him. He can do whatever he wants. It does not affect me. I was just about to finalize this video, but I need to throw this in. December 14, 2022, 7 a.m. That was this morning. U.S. consumer loan delinquencies seen surging to 13-year high in 2023. There's a reason why you're going to hear them on the news saying that 2023 looks like it's going to be rough. First of all, the majority of these corporations right now are laying people off left and right because they're claiming that they need to stay in business. When they lay these people off, obviously houses don't get paid for. Obviously cars don't get paid for. And I think it's also important to understand, a lot of these people who, they're well-skilled, they'll get laid off, but they'll find other jobs. But you also have to understand there's a lot of dead weight that was at a lot of these companies. For example, the people who work at Facebook and work at Twitter and work at YouTube, and their job is to sit there and censor my comments or to check my comments and decide whether or not they meet community guidelines. Yeah, those people are dead weight. As far as I'm concerned, all of them can get laid off. I can give a damn. But the reality is they are going to get laid off if they haven't been already. I look at what Elon Musk did. He moved into Twitter. He got rid of these people. It looks like they're about to have to go out and find real jobs, doesn't it? Doesn't it? So it says, U.S. consumers will fall behind on their personal loan and credit card payments next year at the highest rate since 2010, according to forecasts from TransUnion, a major consumer credit reporting agency. Surging loan delinquencies will follow in a year in which consumers loaded up on credit. TransUnion said in a study Wednesday, Americans took out a record $87.5 million in new credit cards and $22.1 million in personal loans in 2022, the report showed. Consumers face significant financial challenges, including rapidly increasing interest rates and stubbornly high inflation combined with recession fears. Despite the economic slowdown, more than half of the 2,800 Americans polled were optimistic about their finances for the next 12 months. I know I'm optimistic. TransUnion said, the youngest generations express the most confidence. Yeah, that's because they don't know any better. The Federal Reserve has raised interest rates aggressively this year to temper inflation and is expected to increase the policy rate again later in the day. Against that backdrop, lenders are expected to apply tougher standards to borrowers. Credit card originations will probably slide in 2023 from this year's levels, but delinquency rates could rise to 2.6% at the end of 2023 from 2.1% by year end, TransUnion said. Delinquencies on unsecured personal loans will likely increase to 4.3% from 4.1% over the same period. For auto loans, the percentage of borrowers who are 60 or more days past due will climb to 1.95% in the fourth quarter. Then drop to 1.9% by the end of next year. Demand for cars will probably stay strong and the inventory shortfall could cease. Well, the inventory shortfall should cease anyway because the chip shortage has kind of been addressed. So they're catching up. And it's funny because now you're seeing left and right, you're seeing all these brand new cars coming out, fully sophisticated, like that BMW i7 that I was in and I made the video about. The thing had fucking computers everywhere. Like everywhere you looked, there were computers in the speakers. Rising interest rates will also weigh on home purchases. Just over 4 million mortgages are projected to be issued next year versus 8 million in 2021, reporting by Saeed Azhar. Okay, and that's about it. So yeah, that's the story. They're expecting, the professionals, they're expecting stagflation. First of all, it's funny because they don't use the word, but when you get economic data like this, there is no other logical conclusion than to say that, yes, we're in a recession. But if you look even deeper, you look at the CPI, the Consumer Price Index. The Consumer Price Index shows that there was a huge increase in the cost of food, a larger increase in the cost of energy, and a not as pronounced increase in all items less food and energy. But all items went up by at least 7%. Now, food went up by more than 10%. Then energy went up by more than 15%. So the bottom line is we know what it is. You're paying $4 a gallon for premium unleaded. You're paying twice as much as you were paying in 2020. Food has gone up significantly. A carton of eggs is like $5. We know what it is. You can't lie to us. We have eyes, we see.
To be continued.